Hello, everyone, and welcome back. As of this morning, Nvidia has tripled in value over the last year. This makes me wonder if this growth can continue. As long as investors keep putting money into AI hype, I think it is. This AI bull market is probably in its third or fourth game. This means that we are still in the early stages of its growth. That might make you feel bad, and I think it will keep making you feel bad until we hit a real AI bubble, which could be the end of this bull market. Things might be over for good when people stop talking about values at all. The strange truth is that even though we're scared that this might be the peak, it's probably not. We should begin to worry again once we stop. We'll take a closer look at Nvidia in today's video. Nvidia is a giant in the tech industry that, like Tesla, has changed the game by keeping full control over its entire tech stack, from GPS to complex software and firmware changes. Nvidia has a huge part of the market and keeps pushing the limits of what's possible. The way Nvidia and Tesla plan their strategies will be compared, and we'll look at how similar approaches to managing technology and making sure it works with older devices have helped both companies become market leaders. We'll also talk about Nvidia's current financial health, including how much its stocks are worth and what that means for people who want to invest. Stay tuned as we break down these complicated topics and give you a full picture of where Nvidia stands now and where it wants to go in the very competitive world of tech investments. Let's explore the fascinating worlds of Tesla, Nvidia, and AI. To show your support, though, please like this video and sign up for Tesla stock news. Allow us to begin. Let's start with Nvidia. This company has been on a rapid rise that has investors all over the world interested. In just 1 year, its value has tripled, making it a very interesting case study. But the question still stands. Can Nvidia keep up its incredible growth like Tesla's meteoric rise in the car industry? Nvidia's rise has been nothing short of amazing, a lot like Tesla's quick rise in its early years. Doug Clinton from Deepwater Asset Management has some very interesting ideas. He says that we may still be in the early stages of an AI-driven market expansion, similar to the initial surge in electric cars that Tesla led. He thinks that the AI bull market might be in its third or fourth inning. Even though this stage is hopeful, it can also be uncomfortable. This could last until we hit what you could call a peak AI bubble. Not only Doug is optimistic, Lenia, the chief investment officer at Navin Associates, has made a bold statement for Nvidia. She thinks it could have a market cap of $5 trillion, which would be more than Microsoft. Here's a question for you. What stock would you hold if you had to sell everything else? In that case, it would be a monopoly. I think Nvidia is the best company right now. In the next 2 years, that stock could be worth $300, and it's made of AI computer chips. To put that in perspective, Nvidia would be worth a lot more than tech giants like Apple and Microsoft. This is similar to how Tesla has changed the car industry by beating out traditional companies. This is an interesting situation for buyers. The main business that Nvidia does with data centers has grown very quickly, from $15 billion to what is expected to be $100 billion this year alone. This growth rate has never been seen before, and it's similar to how quickly Tesla has grown in its field. It shows how generative AI is changing the world of computers and software. Nvidia is a leader in this technological revolution thanks to its complete market strategy, which includes its ability to scale, its advanced software, and its networking skills. This is similar to how Tesla has been a leader in the electric vehicle space. But with any fast growth, there is a lot of disagreement about whether this rate of growth can last. Even though the pace might not stay the same for a long time, the fact that the number of data center setups has grown and is now worth more than $1 trillion shows that there is still a huge market to be explored. As Nvidia gets closer to a possible $5 trillion market cap, it's important to remember that this would not only make its economy bigger than most global economies, but it could also help it reach more industries through smart acquisitions, similar to how Tesla has grown beyond just cars and into energy solutions. According to predictions, the AI market will grow at a rate of 37% per year from 2023 to 2030. Both Tesla and Nvidia have shown how big the market could get. Like Tesla in its early days, Nvidia stands out as a model for investors who want to make money off of these big trends. But the big question is now the right time to put more money into Nvidia, like early bets on Tesla? It's important to look at growth paths when comparing Nvidia to tech giants like Apple. No offense to Apple, but Nvidia's rapid growth is a lot like Tesla's. In the most recent quarter, Apple's sales went down by 4%, while Nvidia's went through the roof, rising by an amazing 237%. Over a decade, Nvidia's sales grew by 991%, which was much more than Apple's 56% growth. This big difference makes it clear why Nvidia, not Apple, might be the more exciting growth play right now, like Tesla was against standard automakers in the past. Nvidia's competitive edge goes far beyond just financial measures. This is a strong similarity to how Tesla's groundbreaking innovations have completely changed the transportation industry. Like Tesla, which has always been ahead of the curve when it comes to electric powertrains and battery technology, Nvidia is at the forefront of the change in artificial intelligence. Nvidia has been pushing the limits of AI technology with great speed under the direction of CEO Jensen Huang. Huang recently showed off the newest AI chip designs, including the Ruin and soon-to-be-released Blackwell models. This shows that Nvidia is committed to staying ahead of the curve when it comes to technology. These developments are not small steps forward, they are huge steps forward in terms of what they can do, similar to how Tesla's introduction of cutting-edge, high-efficiency batteries has changed the rules in the car industry. Nvidia's roadmap is ambitious and well-defined, showing that the company wants to dominate the AI field. For instance, the Ruin architecture is meant to improve the speed and efficiency of machine learning. This could speed up a wide range of AI apps, from self-driving cars to complex data analytics. In the same way, the Blackwell model is about to get even more advanced, with features like better neural networks and lower energy use that are necessary for growing AI solutions in a way that doesn't harm the environment. This proactive approach to innovation in AI chip technology is similar to Tesla's strategy in the market for electric vehicles, where constant improvements in battery life, vehicle autonomy, and energy economy have kept Tesla at the top of the field. Nvidia is shaping the future of AI by setting new industry standards and giving the foundational technologies that will power the next generation of AI applications. This is similar to how Tesla not only joined the EV revolution, but also led it. With high-bandwidth memory and ultra-fast switches, Jensen Huang is leading a big shift in computing. He wants to greatly improve performance and solidify Nvidia's lead in the AI GPU market, similar to what Tesla has done in the auto industry. Also, Nvidia's software skills are just as amazing as its hardware ones. In the same way that Tesla's own technology has become a standard in the electric car industry, the CUDA software platform has set a standard for the industry. This ecosystem approach makes it very hard for competitors to compete and solidifies Nvidia's place as a leader, similar to how Tesla rules the market for electric cars. When you look more closely at Nvidia's market strategy, it's clear that the company is good at both coming up with new ideas and adapting to changing market conditions. This kind of all-around control reminds me of how Tesla keeps improving its electric cars while making sure that software changes work with older models. It's a plan that keeps customers coming back and even makes them more loyal. People might wonder if traditional ways of valuing stocks, like PE ratios, are still useful in the tech industry, where companies like Nvidia are always setting new standards. Even though market conditions change quickly, these measures are still very important. Traditional ways of valuing a business give us important information about its financial health and where it stands in the market. One example of how important these measures are is Nvidia's stock, which was worth about $150 in July 2022 before going up to over $900. When the stock price goes up by such a large amount, buyers want to look deeper than the numbers on the surface. With traditional tools for valuation, we have to look at more in-depth factors, like how Nvidia depends on a few key customers, which could be risky if these ties weaken. Along with the competition from big companies like Intel and AMD, Nvidia may also face other problems that could affect its market share and profits. Also, it's important to think about how long profit margins will last in a field that is driven by constant innovation and high R&D costs. It's hard to keep your earning margins high